Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Wednesday, the 11th of October, 2023, 6:25 p.m. Central Time. As I said in some of my other reports tonight, why now? Why did Hamas do it now? I know the planning's been going on years. How could you get all those missiles, munitions, figure out how to go low tech, as they're saying? They didn't use the internet. They weren't using phones per se. They went back to the old way. Pigeons, how do you communicate? The old Reuters day, the old days. And if you think about it, we were all watching in, it could be the Roman times. People used birds. They used everything to communicate. It was low tech. They figured some of that out. And it'll be over the next year, we're going to hear so much as to how things were done because we'll be interested in knowing. But they did it. But why now? Why now? That bothers me. And I keep thinking about it. And I think the only answer that makes sense is the symbolic part of hitting around the old Yom Kippur War. Okay, that makes sense to a degree. But more important is the convenience of doing it now, right now, to stop Saudi Arabia from recognizing Israel, from getting the United States to send the armaments and so on that the Saudis won, and blocking things. Because that is on hold. The situation's getting very serious, even more so. I mean, it's a disaster. So how much worse can it get? Well, the carrier group headed by the Dwight D. Eisenhower aircraft carrier leaves port this weekend. It was going to be off the coast of Europe. You know where it's going now. It's going right where it has to, sending a message to Iran, Syria, Hezbollah. Guys, the world is looking at you. Do you want this to happen? Because then the military might of the U.S. starts coming in, and God knows where this whole thing heads, all right? If you don't think that we are all on a powder keg, you are out of your mind. It doesn't take much for this to get crazy. Now, there's going to be another phase that happens, and it's going to be an anti-Israel phase in a major fashion. You got to buckle in and be ready for it because it's going to be terrible. As soon as Israel decides to go on land into Gaza, the killing will be shown all over everywhere. Not, of course, by Israel, but it'll be shown by the Hamas groups. It'll make it to the internet. And the ruthlessness, because it will be ruthless, there is a price to pay for the slaughtering of all these people, the children, the beheading. You know it's going to happen. You can only imagine. You can tell the soldiers don't do it, but you got 300,000 soldiers. You're putting them into war. Do you think you can really control that? So I am beyond fearful of the savagery that we're going to see in another way. And unfortunately, it's going to last a very long time. I am so against Israel going hand to hand into that area. I've said that. And I'm not a military guy, and I don't want to talk politics. But I can imagine what it's going to look like on TV. It's the last thing they need. Right now, Israel has the sympathy of everybody but the Arab world. All right. So today we had PPI to get to the markets, and they are important. Very important because the market totally ignored the headline number and went right for the meat and potatoes. It looked at X food, X energy, and it said, hey, that number is flat, hasn't gone up at all. Market embraced that, and after the number first came out, traders thought about it. I think that's what I'll run with. I was watching it, so I knew how it was going to play out because I watched it first go one way, and then I said, now they're going to look at the other part of it, and they did. Next, we have what's going on in the House of Representatives, which, you think it's euphoric. Okay, they've made a choice. They're going with Steve Scalise. That's the nominee. That's great. He got half the votes of the Republicans. McCarthy only missed 30. How are you going to get this done unless it's, again, all these backdoor deals? That was the downfall of McCarthy, and I think the party knows it. How do you get away from this? So if you think tomorrow you're going to get a vote and get him in, I want to stand here and say, my jaw is dropped. I can't believe they did it. I'd rather bet the other way. Over, under, they're not going to get it. Okay? I don't know if it'll even come to be. This thing's going to drag out. What they don't want to do is have 15 votes, the way they did last time, and embarrass the heck out of themselves. Who would want that? That was pretty terrible. And then you put in a speaker that has, for all purposes, he's on a rein. And if you pull that rein, as Getz did, bang, I got you, you're out. Well, that'll be the next guy. All right, so I don't know where this all goes. But the negative, and there's a negative, how do you get anything done with a weak speaker, if that's what it comes down to? How do you get everything done? I like that the president, he was presidential today, and he wants money for the border. He wants money for Iran. He wants money for Israel. I give him all the credit there. Even was doing something, I forgot, there was one fourth thing that he mentioned that was sort of out of left field, and I said, where'd that come from? I forgot what it was. I'm doing this all by memory. There are no cards. I don't have a teleprompter. I look at a camera when I talk to you. So that's my thoughts. Now, tomorrow we're going to get the CPI number. Okay, and we're going to get jobless claims tomorrow too. Remember that. You get that as well. So the jobless claims will be the first thing we see. Then we're going to get the CPI, and all it need be in the core CPI is as you are, and the Fed on November 1st does nothing. That's my guess as to where we're at. They'll buy more time until the next meeting, and that'll be in December, and then they can say, okay, they've waited again. Do they have to goose it one more time or not? The probability is about 30% that they'll have to goose it in December, and the big bet is nothing will be done November 1st. You'll need a huge surprise tomorrow to get a change. So when we look at the S&P and we look at the weekly chart of it, okay, we can run back up into the resistance of 44.54. That's the 18-day average of closes. Could do that. You know that I did a special report where I thought, and if you saw the report, I made it October 4th, and I said, I think we're bottoming now on the 15, the 30, and the 5-year, and I think we're going to get a rally in the market. And then I also said in the report prior to that I expect October to be full of volatility and churning. So far, we haven't had the churning. So far, it's only the 11th, folks. You're 1/3 of the way into the month. So far, it's been a nice bounce, and you ended a big break in the market. That part's over. Now, the question is, does this just keep going, or does it drop back down for whatever reason and go into the churn? I think that's what it'll do for a little bit. Where might it peak out? Well, you're in a zone first of the 18-day average that you've now spent a couple of days over, so I can't keep saying, that's the resistance coming right back there. It's not like it stopped at it the way it did right here. So it might want to lift to the 100-day average, to 44.70, because it's got the Bollinger Band with it. That's your big resistance area. Will traders buy the market now on pullbacks? Well, I don't think so. Why? Because you're overbought. Overbought, I define as any reading in the slow stochastics. And remember, my formula of slow stochastics is different than yours. My subscribers can all get it from me. You're not a subscriber on YouTube. You're a viewer. My subscribers are the people that pay me in the morning, do the videos and my written research for all the things that I do. They can get it. And if you're using TradingView, we also on our website, if you go into the client resources at iraepstein.com, you don't need to be a paid subscriber. You can get on there, sign up, and then we'll give you the suite that has the swing line, outside days, my version of the slow stochastics, the window envelope there. You can take things on and off, and it takes up 2 slots on it, if you understand what that terminology means. So interesting for you. So I can make an argument, if it gets a good number tomorrow and the market gets a bit euphoric off of it, the 44.70 level with support on pullbacks, 43.58 down to 43.07 and overbought. In the NASDAQ, I'm at the same thinking. You got yesterday to the 100-day average. You played with it a bit today. Between there and the upper Bollinger Band in an overbought market, I will say no. I don't think the market's going to keep going and you're going through those highs. Of course I could be wrong. Very big time wrong. But I don't think that's what's going to happen right now. The Dow is different. The Dow is stuck at the 18-day average. This is what happens most times. When you get to the 18-day average, you stick at it for a little bit, trying to figure out what you're going to do. And that's where you're at. Is the trend up? Absolutely. Can you add another level if you get over 34,091? Yep. You could be talking that you're going to go to the 200-day average, but I do think that'll be a resistance point in the market, so I'd pay attention to that. When we come to the Russell, more like what we just saw here, you could see the battlegrounds, the 18-day average, when you lost the embedded reading. This is so darn important. When you lost the embedded reading, the market came alive and went to the 18-day average. You see this over and over. If you have a bearish embedded reading or a bullish, if you have a bullish and you lose it, you often get a breakdown. If you have a bullish and you break it, you often get the breakdown. The markets go with it. You got to learn how to play with them. And you probably need my formula because it's advanced from the one that you're using on your standard stochastics. When you look at the 10-year notes, you lost the embedded reading. What can I say? My goal was the 18-day average. You hit it today. That was my goal. That's what I was looking for the market to do. And now the question is, you're already knocking on the door with the 66 reading of potentially getting overbought if you get a good CPI number tomorrow, because you'll probably then lose even more yield. And yes, we have lost yield. We've gone in this market from near 5%, what we're 4.8, 4.9, all the way back into the 4.6 area. This is important. In the 5-year notes, you're overbought as can be. You know, if you extend up there, fine. But I think more or less you're going to churn a bit at the 18-day average of closes. And in the dollar, you had an embedded reading that was lost right here. The red line got back under 79, and the market went right to where I thought, the 18-day average. And now it's got to figure out, is there more of a downtrend in it? If there is, if all these numbers are good, if the Fed is going to, and the market assumes the Fed's on hold now, you probably lose ground in the dollar. You start pulling back, and maybe the 104.55 level could become a realistic number. And the same in the euro. As I mentioned to you, this is Wednesday. On Monday, I got contacted to do a piece for Bloomberg. And I did it. This was an oral podcast, and away it went. And they were asking, do I think parity's in the cards? I said, no, I think it's going to get very hard from here to get down to the 100 level. I said, I could make a case for the market to rally, not break, technically. And that seems to be what we're doing. But we're not through with everything, folks. We need to get this next stage, CPI. After that, we get the PCE number and so on. But because if you get CPI mild or flat, PPI flat already, it's in the bag, jobless claims don't go crazy tomorrow, where are you going with all this, okay? You're going to a Fed that's on hold. Then it's up to what the market's going to do, as the Fed members are saying, because the market's the one that's been advancing interest rates, not the Fed. That is the truth of what's going on. In the British pound, you might want to reach up here, but it's doubtful. You're already in overbought territory. It's a straight up run from near the 120.20 level or whatever. I'd be a bit cautious in there if it were me, but I am friendly, okay? Bitcoin, all of a sudden the volume's fallen off and the market's back in the bear camp with today's action. This is the first move under the 18-day average since back over here. The beginning of September. It's taken a long time, and the market is starting to slip back. Also, is the market rallying like gold is during the war in Israel? No. If anything, you saw risk off. So it changed its gear, and you always got to recognize what it's doing. For a while, it was a risk-on trade. Now it's a risk-off trade. Very interesting. Then we get to crude oil. And in crude, you've got to be careful. You know, how do you stop Iran short of a war? I mentioned what I think is a very realistic thing yesterday, and I'm not a warfare person. I'm a thinking person. And if I wanted to send a message, I knock out a field or two, a well or two. Show them, hey, you get your money from oil. Do you want to have no money? You can't take it all out because you're going to create a world shock. It'll still create one in the markets, just the fact that the U.S. did that. But what a message. Because that's their funding capability. They'd still have the oil in the ground. They'd have no way to get it anywhere. What they've got stored, they'd have stored, but you could knock that out easy enough. It's above ground most of the time. So, bingo. Am I a statistician for the statistician? Statistician? No. But it's there. And it's an open target that nobody talks about without an invasion into Iran, but it is a way to do punishment. Don't know how else to say it. When we take a look at Brent versus the others, here's the Brent coming down. So it's not in an uptrend here. It's in a correction phase. Do you remember when we rallied off the Israeli situation, what I said to you? The first thing that I said to everybody was, please don't get caught up with, oh, the Strait of Hormuz is going to be shut down. Oil prices go up because of it. It's not what history shows. And that's what I said. I think the tape's 2 days ago. Go look. I know I said those things. Still coming down right through here. Then we get to the heating oil market. All right, this is not a market that I'm inclined to want to be short. If something goes wrong in oil because of whatever, with all the strife in the world that's going on right now. Remember, Finland is claiming that its pipeline to Estonia was sabotaged, the natural gas line, and they are looking at Russia. Did you do this again? That is what it is. And of course, Russia, we don't do those things. How dare you say that? It's got to be your own mischief. You understand. But if they have that, who knows where you go. In the meantime, there's no trend. I don't see anything to do there anyways. Natural gas came down, and it found, to my surprise, I didn't expect a break like that. That came out of left field. I'm looking at it going, are those quotes even remote? They were. I mean, it was, take a look at the size of this range. I was taken back. You don't get those every day. That's a big range. And the market held the 200-day average. It's still up there, but the market is weakening on these higher prices. I told you I think we have a breakout. I told you I think the market is at a bottom. I think that you're going to get a crossover of the 18 over the 100-day average. And until you take out these lows right here, I think the pros will look at the market as an opportunity on where? The downside. And again, you got to always pay attention. What are you doing with these Bollinger Bands and the other parts? And that's what I want to talk to you about. It's simple. If you haven't taken my Bollinger Band course, it takes you a weekend, maybe Saturday, to complete it. It's, I think, 14 or 15 videos. You're going to learn what an embedded reading is, how it works, how to tie it in with the Bollinger Bands, how often Bollinger Bands stay over or under the band, why, how it's put together, and then I walk you through the different charts. But I then give you 2 weeks of my morning spider and my morning futures video. So you're getting the stock spiders and that in one, the other, and we review every morning. I will bake it into you. You're going to get the free charting software. You're going to get historical data all in it. You're going to get my commentaries that are written every day. You're going to get the full package. It's not expensive. How do you get it? Go to our website, iraepstein.com. Go to the word education, or you can click right up here. Just give it a click there, and away you go. Couldn't make it any easier. I'm Ira. You have a good day. Let's see what that CPI shows in the morning. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.